Hey guys, so this video, in this today's class, we're going to be talking about basically how to find what type of trader you are. There's a lot of different styles of trading. For example, the main four types of trading would be scalping. Scalping is what a lot of us are comfortable and familiar with, and scalping pretty much means that you are in and out of the market. Now, if you're familiar with HFX, you know this can be in just a little bit of minutes, or you can actually scalp in 15-minute or even hour segments, right? You can be in the trade for an hour. You can get a lot of pips and you can still be considered a scalper. The next type of trader that I would consider myself as well is an intraday trader. An intraday trader just means that it's similar to scalping, but I just know that I'm going to be in my trades for a little bit longer. And with intraday trading, you can take as many trades as you want within the day, but as long as you close those trades, I would say before 5 o'clock, and you're not really holding any trades overnight, you will be considered an intraday trader because you're entering your trades and taking your profit within the same day, but it may not be within the same hour. Then you have swing traders or position traders. Well, they're two different things, but swing traders, these people are going to stay in their trades for a couple of days. So they use higher time frames because they know that, okay, this market is going to take a little bit longer to make this particular move. So I know that I may be analyzing on the hour chart or the 4 hour chart or maybe even the daily chart. And you're going to see your profit in 1 to 3 days, well, 2 to 3 days, which isn't that bad. And then the last one is position traders, which these people hold their trades for months. Now, when you're doing all these analysis, you can literally just come to your chart. Now, you don't have to be a part of any program or academy. You don't have to have an IM Academy account to do this. You can simply use TradingView. So if you guys are taking notes, or if you're new, or if you're not familiar with TradingView, it is a really good website, and it's a platform that a lot of these educational companies that we're familiar with, they actually use TradingView to fund their platforms, which is nice because TradingView is like one of the leading developers when it comes to marking up charts and investing. So if this looks like your previous Liberty scanner or your previous harmonic scanner or your pivot scanner or whatever scanner that you were subscribed to, that's because it's based on the same exact coding. So you can come to TradingView and you can get the same type of analysis and results because it's using the same tools. So you just go to tradingview.com. And when you go to tradingview.com, you don't start on this page. You actually start on this page here. Um, and then you can select which currency pair that you want to trade or which asset that you want to trade, because something I like about TradingView is it's not just focused on Forex. If I click on the search bar, which is right at the top of your screen, you'll see that we have the option to trade Forex. We have some traders in the chat that really like to focus on crypto. You can trade indices like US 30, NAS 100, SPX 500. You can trade bonds. You can even trade stocks here. You don't have to be limited to trading Forex, but that just happens to be what our class is focused on. So first you want to select your currency pair from the home screen. I like to use Euro USD, which you guys will learn to know and love. And then I also have my additional currency pairs over here. Now, let's just say you do have 3 or 4 assets that you like to trade. You can just come over here to the right side of your TradingView screen. You can click this plus sign, and then you can add the pairs that you want to keep up there. So if I wanted GBP USD to be a pair that I'm consistently studying, I would just click the plus sign, and you'll see that it'll show up on my watch list. So for today's lesson, we are going to be going over Euro USD. And we may also dabble into some GBP JPY, depending on how much time we have left. Now, again, there are 4 types of traders when it comes to time frames and how long you're staying in your trades, which is what I just reviewed. But you also need to figure out what is your style of trading, right? Are you a trend trader? Are you a reversal trader? Are you a bull trader, which means you like to focus on buys? Are you a bear trader, which means you like to focus on sells? So depending on the trading style that you actually select, that's going to determine which type of indicators, confirmations, and signals you are looking for before you get into your trades. Now, for anybody who has been trading for a while, or if you just started trading, could you guys just drop in the chat what type of trader you consider yourself? Like, I want to know whether you're a scalper, and I also want to know if you figured out more about your trading edge. Like, are you a scalper and a bull trader? Are you an intraday trader and a bear trader? So just drop in the chat, and I just want to see what type of traders we have here. I know myself, I trade trends and I trade reversal, but I think I'm more of a reversal trader. It's not that I don't like the trend. I just know that eventually the market has to turn around. So I'm banking on that. I don't know how much further it's going to go in the same direction, but I know that a reversal is bound to come. And I also will say I'm a scalper, right? I'm a scalper and I'm a reversal trader. So if I know that a reversal is about to happen and it's going to happen after a big move in the opposite direction, I'm really excited because the drop that I'm going to experience is going to be massive, and I really appreciate that. So we got some ideas in the chat. Spicy, who's the crypto queen, she says she's a scalper, intraday swing trader, and a bull trader. So this means she likes to be in and out of her trades within the same day. She doesn't mind to hold her trades, but she also likes to focus on buys. So that's really nice. What you guys will learn about yourself as you trade more is that everybody has a trading edge, right? And we learned this from Mark Douglas. Your trading edge is just how you trade. How are you perceiving the market? What type of things are you looking for? Because it's not going to be the same for everybody. I always compare trading to losing weight or working out. Everybody doesn't have the same body type. Everybody doesn't have the same genetics. Everybody doesn't have the same physical capabilities or access to the same things. So what they focus on in their weight loss journey is going to be different for every single person. And the same thing is true when it comes to trading, right? You can learn a whole bunch of things, but you have to then figure out, all right, how is this relevant to me? And how is this going to make me money? And you kind of got to put your own little formula together. Kayla said she's an intraday and reversal trader. That's nice. That means she knows what confirmations to look for when reversal is coming up, and that is how she chooses to profit. And she's also going to be opening and closing her trades within the same day, not really holding trades too long. She also says she likes to fill in the liquidity, which is nice. I'll also talk about that today because as a reversal trader, that is something that you look for, right? You look for that liquidity. It's a key part of having that particular edge. Joe said he's an intraday swing trader and a reversal trend trader. Okay, that's good. So you're versatile and you don't mind waiting. So good for you. In the long run, that is going to pay off even more because where some people are just catching 20 pips or 40 pips if they take one trade in a day, you know that you're going to get 100 to 200 pips just simply by holding that trade, and you don't really mind all of that noise that's happening when the reversals and the pushbacks are happening. And then Kayla also says she's a scalper, sometimes swing trader, and like finding consolidation also. Okay, so as you guys can see, there's not a lot of people in the chat, but every single person has a different style of trading and what they're looking for. So the first thing I'll talk about is trend, right? I'll talk about trend trading and liquidity. And no matter which style of trading you tend to focus on, being able to identify the trend and being able to identify the liquidity that's happening in the market will overall help you become a better trader and what to focus on. So if you are familiar with the concept of liquidity, just drop some sevens in the chat, but I'm going to review it. Anyway, either way, I just want to know how far I should go into this. I know I'm familiar with liquidity. It was one of the best lessons I learned about trading, and yeah, we're going to talk about that today. So again, on my trading view chart, okay, good. That's very good. On my trading view chart right now, the indicators that I'm using, and again, this is going to be different for every person, but this is something you can write down as well. There are different categories of indicators, but the indicators that you're using when you're getting into your trade, they're all essentially designed to tell you the same thing or something similar about price. So before you get into any type of trade, no matter what you're trading, no matter what asset, what style, you really need to know what is the current trend of the market. You need to know, are there more buyers in the market? You need to know, are there more sellers in the market? So some type of trend indicator is going to be extremely important for you to have on your chart. And in this case today, I'm using two EMAs, right? EMA stands for exponential moving average. And it's literally telling me what direction the market is going. Where are more traders inclined to go? Are they inclined to buy or inclined to sell? Now over here are the settings for my two EMAs. You can have one EMA and it'll be just as effective. But for me, I found that having two trend indicators is really nice. So the blue EMA, which we can see by the blue numbers here, that's my 50 EMA. It's showing me this blue line here is showing me the average place of where price was at in the market over the last 50 candles, right? And then, of course, my 200 EMA is going to be showing me the last place, the last average place that price was over the last 200 candles. Now, I like to just zoom out because typically when I'm just trading and I'm moving quickly for myself, I'll basically only focus on what I can see in the market, right? I'll only focus on what I can see. I don't always have to go back. But for the purpose of this lesson, I will, and I'll tell you guys why. So if I'm using an hour time frame, right? Because you have to select your time frame when trading, so you can have your candles or price snapshots appear every 5 minutes, every 15 minutes, every 30 minutes, or every hour. If I currently have my chart on the hour, that means each and every one of these bars that we see on our screen represents 1 hour in time and what price was doing. So all that we can see on our screen right now goes all the way back to April 10th, which I can just see at the bottom of my screen. So that's a lot of information to analyze. Now if I zoom out, right, looking at my EMAs, we should understand that if you're looking for buys, right, you're going to want to have a bull market. Bull market means that the market is going up. People are continuing to buy higher and higher and higher. And you're going to notice this by the shape of the market, but also the fact that most of the candles are falling above both of the EMAs. This means that price is consistently pushing above average. People are continuing to buy no matter what the price is, and it's just going higher and higher. Now, I always say that there are 3 ways that you can tell whether price is trending up, down, or sideways. So the first way, of course, is the shape of the market. We can see that the market is going up. This is a clear uptrend, right? Most of the candles, not all of the candles, but most of the candles are above both of these 2 lines. If you guys can see that, just drop some 7s in the chat, and I'll drop some 7s. So this is how we would know that the market is trending up, right? That's how we would know that it's an uptrend. The second way you can tell what the trend of the market is do you see, you're only going to see 2 colors on your chart in the candles 9 times out of 10. So you're going to see green candles, which represent buyers or upward motion, bullish momentum, or you're going to see something like this, which is red candles representing bearish momentum or where the market is going to sell. Now, the first way, again, just zoom out. All you have to do is hover over this little plus sign right here. Down here at the bottom of your screen, you can zoom out and you can see a lot more of your screen. You can even go down to a smaller time frame and then just do the same thing. Zoom out and see, okay, is this market mainly trending up, down, or sideways? And we can still see for a long period of time, it was trending up. Now, the second way that you'll be able to notice what the trend is, I'm talking to my trend traders right now, is you will see, let's look right here in this section. I'm just going to circle it. Right? Another way that you'll notice that a market is trending up is that you'll see more green candles than red candles. Now, just because the market is trending in a certain direction, that doesn't mean that you're not going to have anything like this. That doesn't mean you're not going to experience any pullbacks, because you definitely will. 9 times out of 10, the market is doing this, and then sometimes it's doing this, and then sometimes it's doing this, and then sometimes it's doing this, and then it'll do this. So you have to notice that just because it's trending doesn't mean that you're not going to get anything from the other side. So with a uptrend, you're going to notice more green candles than red candles, right? That's the second thing. The first thing is the shape. The second thing is it's above both EMAs. or one if you're only using one. And the third thing is that you're going to see more green candles than red candles. And vice versa. I'm going to just go to a little selling motion here. So we can see here, right? We can see the market was trending down for this period of time based on the shape. We can see that it was under both of the EMAs, and we can also see that there were mainly red candles. There were more red candles than there were green candles. So that's a clear snapshot of a downtrend. Now, if you're a trend trader, that is going to be the first. Oh, what happened to my candles? Hold up now. If you're a trend trader, the first thing you're going to want to do is establish what the trend is. Now, I like to do this over multiple time frames because it just gives me a better idea as to what the overall trend of the market is. So honestly, I ain't going to go through all the color system right now, but I like to start on the weekly, right? Because if a market is trending, or if you could tell if the market is trending on a weekly basis, let's just say it's trending up for the week, you have a higher probability at finding more profits in your buys because overall, the average of the last 7 days is the market was trending up. So I should focus on these buys. So we're going to look at Euro USD and we can see, okay, for now, we don't have all the confirmations that we need for the trend to be established because let's zoom out, right? Let's actually zoom out. So if we zoom out for the last couple of weeks, we can see that this market was on a downtrend. We see the shape, we see it's below both of the EMAs, and we also see that it was more red candles than green candles. So just for now, and based on what we're seeing, we could say, okay, this market was going down. As a trend trader, I should be focused on sales, right? Now, you're not going to want to take your entry on the weekly time zone because that would just take the market too long to travel up to that resistance because it's an average over so many numbers. So what we're going to do is continue to establish, right, our trend bias on smaller time frames. So we have the week. I like to look at the 4-hour. Oh, actually, let me put the lines on there so y'all can see this and it can make sense. And if y'all notice, sometimes your chart look a little funky. Once you like change it or something, just right click and then click reset chart view, and then everything will stabilize. So I'm going to use some more free tools from TradingView. And based on what I can see, remember what I said earlier, guys, the market will go down, then the market will go up, then the market will go down, then the market will go up. It's our job as traders to establish, okay, where are these downs and where are these ups going to happen so I can know whether I'm going to buy or sell. And these areas are called support and resistance. So what we're doing now is just setting up our areas of support and resistance, literally just based on what we can see. So if I can see that the market was trending down and then it hit a point where it stopped trending down, I'm going to put a line of support here because I know that once price reached this area, which we can see demonstrated by this liquidity or these wicks, price may move up. Right? If you guys can see that and it makes sense, just drop some sevens in the chat. We can see price was on a strong selling trend. Price hit a support, and then price actually turned around, right? Okay, we got some sevens. All right, so that's one area of support. So we have an additional area of support. Now, this area of support comes from the same thing. Price went up, and then price came down. And then we see price created a new level of support before it continued to go up. So what you really want to do as a trend trader is you want to establish these, whether you're choosing to only focus on buys, whether you're choosing to only focus on sells, or you're just going to trade the trend no matter what's going on. You want to simply identify these key levels of support and resistance that you can see with your eyes. Now, the easiest way to be identify this, and what I always say is look for the wicks, right? 9 times out of 10, if you see a wick, right? A wick is known as the shadow of a candle, and it's telling you price is having a hard time getting up or below this point. So we see wicks here. That forms the level of support. We see the reversal, right? We see wicks here. It forms the level of support. The market continues to go up. Right now, I'm just going to go back into the past a little bit just so you guys can see more examples of this. And this is also a quick brief lesson in liquidity. Liquidity is happening wherever you see these wicks occurring, right? And this is just a fundamental trading thing that you're going to have to be able to identify if you want to be a successful trader or you want this to really make you money. So here's an example of some liquidity, right? Now, what liquidity will do is this was a previous high, right? Let's just say this was high number 1, right? The market will sell a little bit from a previous high, right? It'll retrace and go up. It'll create a new high, right? So we're going to call this high number 2. And the purpose of this new high is to take out these people, and then the market will go and it will correct itself and go in the right direction. So liquidity is, we have a high point, right? We have a wick, a sell, right? We have a wick, a buy. And then what do we have? We have a wick, a sell, right? So you have to get good at being able to identify how many rejections has it been in a certain area, right? Especially no matter whether you're trading for a trend or you're trading for a reversal, right? Now, for example, if we were trading the trend, let's just say we see the market hit a level of support here, right? It came down to our support line, which is here. We see we had a wick, and then we had a push-up, right? Then we see the market created our same level of support, right? We see that we had a small wick, and then we had another push-up. Wherever you see those wicks, you should know that something is about to happen. If you're seeing wicks at the bottom, right, this is going to let you know that the market is going to go up. Now, whether you're trading the trend or you're trading the reversal, the wicks are going to let you know which direction that the market is going. If you guys can see that and it makes sense, just drop some 7s in the chat. And I'm just going to go back and show some more examples. I would say 3. So what you're going to notice is that you'll see, let me do a smaller time frame. But all right, so we have our weekly resistance, but I would say 2 wicks, and then on the third one, that's typically when the market will make its move. So let me go down to the 15-minute, and then we are going to have another example of this. All right, so let's look at yeah, this market been a little weird. All right, here we go. So when you're getting into a trade, Caleb, first you need at least 3 or 4 confirmations. So counting the wicks would just be 1 confirmation. So let's just say if we were going to look at this area right here, right? We can see that there was a previous trend. This would be a reversal for my reversal traders. You will see that there was a previous trend going up. You will see that we had 1 rejection. You will see that we had 2 rejections. And then you will see that on the 3rd rejection, that is when the market actually made the move, right? So your 3rd rejection would be one of your confirmations or signals to get into a trade if you're a reversal trader. So that'll be 1. You would say, okay, I got my 3rd wick. I got my 2 rejections. That's confirmation number 1. Now, another indicator that I use is the MOM indicator, which you can simply click on indicators right here. You can search momentum and it'll come up. Now, I really, really, really like this indicator because it's so straightforward and easy to use. If this blue line is above the dotted line, you want to focus on buys. If this blue line is above this blue dotted line, you want to focus on sells. And the best time to actually get into a trade when trading reversals and using this indicator is when it is crossing, like as soon as it crosses down, you know, all right, I could be getting into the sells. And as soon as it crosses up, you know you could get into the buys. And the same thing for the stochastic, which is a really, really, really good indicator for my reversal traders. For the stochastic, it'll do the same thing. As soon as you see that price crosses below, right? Like it'll be up here. Once it crosses below this top dotted line, you know it's about to sell. Once it crosses above the dotted line at the bottom, you know it's about to buy. So back to your question about the wicks. If we were going to look at this candle right here, and we were reversal traders and not trend traders, we would say, okay, we have our, well, you can do it on third or fourth one. So we have 1, 2, 3, right? 3 wick rejections. And then on the candle we're going to enter in, we also have a wick. Not only do we have a wick, we also have our MOM line facing down, and it's preparing to cross, right? It actually crossed here and it's still sold, but it's preparing to cross. And we have our stochastic line that is crossing down. So all of these indicators will be perfect for somebody who's getting into the trade for a reversal. We have our wicks or liquidity. We have our MOM facing down, about to cross below. And we also have our stochastic crossing down. And that is why we would take the trade in that case. Now, I'm going to show you a buy example with the same thing. So here is one right here. This is a really good example. So right here, you see we have 1 rejection, right? We have 2 rejections. This one is not really a rejection from the bottom. But then on the third one, it's always going to be, well, not always, but it's a high likelihood that on the third or fourth rejection, that is when the market will make its move. So in this case, we have 1, 2, 3 rejections. We have candles above the EMA, right? Telling us price is above average, is going to go higher. We have our MOM crossing up and going above that 50 line. And then we also have the stochastic going up and crossing up, which would make this a good move for a buy. And this is actually a good trade for a trend trader or a reversal trader, because a trend trader is trading with the trend. They see the momentum is high. They see the stochastic is over sold, which means it's going to buy. They see the green candle, they see the liquidity, they buy. This would have been a great profitable trade. So did that answer your question? And I'll just do some more just to show you that that's a pretty valid system. All right, awesome. So here is another great example. And this will be for the reversal traders. So we see that we're coming off of a big drop, right? We're coming off this high trend. That's our first indication. We have 1 rejection, right? You can count that as a rejection. We have 2, 3, right? And then even 4. Or even if you don't want to count this one, you just want to count it from here. 1, 2, 3. On the fourth one, we have our green candle. We have our 4 rejections. We have our MOM facing up and above 0. And we also have our stochastic above this line as well, right? So I just did a few different examples for both reversal and trend traders. But now I'm just going to go in order so you guys know specifically what to look for based on your trading style. But so far, do you guys have any questions about anything that I've gone over so far, or anything that you want to ask? If no questions, just drop some 7s in the chat and let me know you are good. Okay, awesome. Okay, awesome. All right, Teresa, Joe, let me know if y'all good. And then I'm just going to move on to the specific things that each of these different type of traders should look for. Mainly just reversal and trend traders, so it's not all over the place. All right, well, I'm going to move on. All right, so firstly, I've selected my currency pair. Now I'm going to select my time frame. In this case, I'm going to use I'll just use the 1 hour, and I'm going to first do trend traders, which I just did a little bit of, but first I'm going to focus on the trend. Sorry, y'all. Let me just get this looking right. All right, so for my trend traders, if you're going to use this strategy, you first need to add 2 EMAs to your chart. 1 or 2, but 2 is better. And again, this is for trend traders, tips and tricks that you can use to maximize your profits. So I'll just drop this in the chat as well. Say trend traders. Trend traders, you're going to need 2 EMAs. You're going to need 1 MOM and 1 stochastic. Those are going to be the indicators that you're going to use. Now, when you're trading the trend for a buy, that's the first thing I'll go over. For a buy, you're going to want to see a green candle. And you're basically going to ask yourself these questions. The first question is going to be, for a buy, for a trend trader, do I see a green candle? Right? Do I see a green candle? That's going to let you know that the buyers are in control, and they are attempting to push the market up. And I'm just giving you guys a second to write that down. The second thing you're going to ask yourself for a buy as a trend trader is, do I see any wicks or liquidity forming at the bottom? Right? Do I see any wicks or liquidity forming at the bottom? Because that liquidity, I'll honestly say that's like an 85% chance that the market is about to make a move in the opposite direction. Right? So first is, do I see a green candle? The second one is, do I see any liquidity, right, at the bottom of my candles? The third question you're going to ask yourself is, are my candles above both of my EMAs, right? This is going to let you know price is way above average, and 9 times out of 10 is going to continue to go in that direction. So right now we're focusing on this section for our example for the buy. So we have a green candle, yes. We have liquidity at the bottom, which would consist of 2 to 4 rejections, right? Just kind of play it by eyesight or play around with it. You won't be right every time. The third thing is you have your candles above both EMAs, letting us know that the trend is high and it's going to keep going. The fourth, I'll go slower. The fourth confirmation for a buy will be that the MOM is above the dotted line, right? That means that the momentum for the buyers is extremely high. It means that the buyers are going to continue to push price higher and higher because they currently have control and momentum in the market. Now, with the stochastic, I love the stochastic because it's really like 4 or 5 indicators in one. So I'll try to go a little bit slow, but there's a few different ways that you can use the stochastic to determine the trend for a buy. So the first thing is, it's really like so many different ways to use this indicator. So the first thing for a buy is you would want to see that the blue line is on top of the orange line, right? With the stochastic, it's always 2 lines. It's the signal line, and I forgot what the other line is called. But if the blue is on top of the orange, like in this example right here, that is an indicator that is going to buy. So that's another question you could ask yourself. Is my blue line above my orange line? If you get a yes, that's a confirmation for a buy. Now, this next question is kind of a compound question because it can be either or all. So for a buy, let me clear some of this stuff off. For a buy, you ask yourself, is my stochastic line crossing above any of the dotted lines? Is it crossing above any of the dotted lines? So this can be the bottom. Because 9 times out of 10, if it's crossing any of these dotted lines, whether it's the bottom line, the middle line, or the top line, this is another strong indication that price is going to continue to go in that direction. The crossovers are, because there's a difference between confirmations to get into your trade and then the signal where it's like, yes, I should enter. The cross up, no matter which line indicator you're using, is such a good confirmation that the market is going to continue to go in that particular direction. Like, that's one indicator that I use to enter my trades. So in this, we can see that the market was crossing up right here, right? So let me put a vertical line so we can, any of these candles would have been good, but let's just use this candle. Let's use this candle right here. Okay, perfect. It's still a good candle. So we can see, we ask ourselves the confirmation questions. We can see that there's a green candle. We can see that there's been 1, 2, 3. It never fails like clockwork, right? There's been 1, 2, 3 rejections. So that's 2 indicators. We see that the MOM is above the dotted line. And we see that there's a cross up happening. So all of these things tell me if I would have saw this, I would have been like, yo, I'm going to get into this trade for a buy because this is so clear. I would have set my, I'm not going to get too detailed in the stop loss and TP because it's not really confusing, but I would set my stop loss at a previous low. Any previous low will be fine, but we're just going to use this one right here. I would set my stop loss at a previous low, and then I would just set my TP double that. So if my stop loss is about 15 pips, my TP is going to be 30, right? That's going to give us a nice 1-to-2 risk to reward ratio. It means we're risking 15 pips to make 30 pips, and that's not bad at all. And as we can see, based on all of our confirmations being correct, even though we're looking at this in retrospect, the market did buy. It actually did continue to buy. So if you guys, and I'll just show you one more example so you can see that all you have to do is be patient with yourself. All you have to do is ask yourself these questions and just don't jump the gun. It's completely, literally pointless to jump the gun and lose money. Like, I lost so much money just being stupid. That's really the moral of the story. I'm not even gonna sugarcoat it or lie, being dumb. So we're gonna do another example. And let's use anything is fine, really. All right, I'll use this is a good example. We're gonna use this candle right here. Right? The market won't always be perfect, but sometimes it gives you some really good setup. So we're gonna use this green candle. So let's just say, and I'm gonna just take these candles away so that we can't see it. All right, there we go. So let's just say sorry, y'all, I forgot what my entry candle is. 1 second. Sorry, guys. All right, we're gonna use this right there. So let's just say we came into the market at this time right here, right? We would have said, okay, all right, the market just opened. I see a green candle, boom. All right, I can see that there's some liquidity or wicks, right? This stuff is so obvious. Like, once you see it, you can't see it. You're gonna be like, okay, boom. You're gonna say, okay, wow, I also see my candles are trending above both of these trend lines. This is amazing. You really only need to ask yourself 3 or 4 questions before you take the trade, but the more the merrier. So far we got 3 yeses. Should we get into the trade for a buy? Yeah, it's looking good. What else do we have? We have our MOM line about to cross. It's right on it, y'all. It's about to cross above the dotted line. That's another indication for a buy. What do we have here? We have the stochastic crossing above one of the 3 dotted lines. So based on all these 6 or 7 confirmations, if you guys would have seen this in the market, would you have felt confident to take this trade for a buy just based on what we talked about just now? Drop a 7 in the chat if this looks like a good trade idea for a buy. Okay, good. So I'm gonna just let the replay play out. I'm gonna put a stop loss line here because the stop loss, I'm gonna use a previous low. Right? This is our previous low. I'm gonna turn this red. And then for my TP, I'm gonna set my TP at a previous high. This is a previous high. And I'm gonna turn it blue. Now I'm just gonna let the trade play out, and we're gonna see if, based on our confirmations, did this trade hit TP or did this trade hit stop loss? Okay, that was pretty quick. Look like this trade hit TP. Like, it clearly hit TP. And let's just see, is it gonna hit our stop loss or is it gonna, okay, finally, eventually. But as we can see, if we would have gotten to this trade with a 20 pip, if we would have gotten to this trade with a 20 pip TP, it would have hit. So that's our trend trader confirmations for a buy. I'm just going to quickly do the trend trader confirmations for a sell, which are pretty much the opposite if you're using this strategy. But I'm going to go through it anyway, because when you watch this video at a later date, it might just make sense to you, right? It might just make sense. So here we go. Here's a really good example of a trade that was setting up for a sell. I can use a better one just because that one was like very much active, but I'll use a better one. Okay, all these are good down here. I'll use these down here. So we're gonna focus on this candle right here for a sell. And again, this is for trend traders, for a sell, and we'll just use this one. No, this one's better. We'll use this one. All right, so let's just say you came into the market up into this candle and you say, okay, I don't know what's going to happen next. I see some liquidity here. Is the market going to buy or is it going to sell? You're just going to simply ask yourself these questions. The first question is, do I see a red candle? We do see a red candle. That's really good. It lets us know sellers are in control. Price has a higher probability at going lower and lower. The second question we're going to ask ourselves is, do I see any liquidity? Right? Liquidity is also equivalent to wicks, right? Is the market rejecting price at a certain area? If it is, and you see those rejections happening at the top, that means that the market is probably going to sell. So we have 2 confirmations for a sell. The third question you're going to ask yourself is my MOM line facing down, right? Or is it below the dotted line? This one's coasting a little bit, but based on our other indicators or questions, as long as you have 4 or 5, 3 or 4, it'll be fine. So let's just call that one a call me maybe, right? And then we have down here, we can see that the stochastic line, it looks like it's about to cross down as well. And also you want to see that the orange line is above the blue line. For example, in this case, orange line above the blue line, big sell candle. Orange line above the blue line, sell candle. Orange line, down here, orange line above the blue line, selling momentum, right? So for buys, blue above orange. For sells, orange above blue. And then we're going to set our TP this time at the bottom. And we're just going to see how this trade played out. We're going to set our TP at a previous low, right? And I'm using this as an example, this previous low. And we're going to set our stop loss at a previous high. And we're doing this because, remember, the market moves in patterns. It's either going to hit the previous high or it's going to hit the previous low. Based on our confirmations, this is looking like a sell. So let's actually see what happens in the replay. Look at that. TP smacked, right? TP smacked, just as we suspected. And then it continued to sell for a while. Right? It continued to sell. And then look, y'all, and this is just a cool little tip, but we can see that our previous low became a new point of resistance, right? And because this market is selling, now it's going to start to create wicks here, right? And so it's going to start to create wicks here. And so, right? So if that makes sense for my trend traders, basically the stochastic is a great tool. No matter which indicators you're using, you can definitely add it to your arsenal of indicators because it is literally like 5 indicators in one. Honestly, if you just wanted to use one EMA and a stochastic, you would really be good, right? Because you can get 5 yes or no's off the stochastic alone, right? It's a trend trader. It's a trend indicator. It's a momentum indicator. It tells you everything you need to know about price. So if that makes sense, guys, you understand what to look for, buys or sells when using this simple strategy, just drop a 7 in the chat. Then I'm going to move over to the confirmations for my reversal traders. And then I'll take any questions that you guys may have, All right, cool. Awesome. Let me take these drawings off the chart. All right, awesome. If you guys have any questions, feel free to drop them in the chat now. I will take questions at the end, but if I know I forget literally everything, but if something's on your mind right now, go ahead and just ask. All right, awesome. So we're gonna move on to what to look for if you are a reversal trader. And the reason why I'm breaking it down like this is because when we first start to learn a trade, it's just so much information. Like I know the background that I came from trading within I Am Academy and my previous trading group, it was just so much information being thrown at you at one time. You didn't really know what's relevant and what's not. So the reason why I'm breaking it down like this is because if you know the type of trade you're looking for, or if you know what your indicators are telling you, you'll be able to establish if you're trading the trend or if you're trading the reversal. You won't really get stuck in the middle, right? Because it's clear. You have very clear questions that you ask yourself before you get into these trades. If the conditions are met, take the trade. If the conditions are not met, wait, right? This market is open 24 hours a day, 5 days a week. And if you're trading crypto 24 hours a day, 7 days a week, so you're not missing any opportunities. There's no rush to get into a trade. There's no rush to lose your real money. But just practice this. I promise you. Teresa, is she here? I think I saw her here. But Teresa is somebody who really listens. Like, she just literally applies the basic information I'm giving her. I'm not a perfect trader. I'm not always right. Sometimes my trades hit stop loss, but I'm doing the same thing every time. I'm asking the same questions every time, right? And I've increased my win rate. So yeah, now let's focus on those reversals. Now reversals are not pullbacks, right? Pullbacks are, let me turn this off. Yes. So a pullback is when this happens, right? So let's just say the market is, we're going to look at this little stretch of candles here. So we can see that the market is going up. It's a clear, obvious uptrend because of a few different things. We see our indicators, candles above the EMAs, all that goodness. Now, if this market is going up, remember, it's not continuously going up. It's going to go up, and then it's going to pull back. It's going to go up, and then it's going to pull back. It's going to go up, and it's going to pull back. Go up, pull back. Go up, pull back. Right? So a pullback is just it's a small break in the current trend. But a reversal is the opposite. So when you're getting into a buy trade, right, you'll have let's just look at this area, right? We have lows. Then the market's going up. So now we have another low, but this is considered a higher low, right? Then we're going to keep going up. And this is still a low, right? Because it's a pullback, but this is an even higher low than the previous low. And this is a higher low, and so on and so forth. So when you're in a buying trend, what you're going to notice is that there are higher highs being created, right? Because this is a high, but then the market went up and this is a higher high, right? And then just as the highs are getting higher, the lows, they're still low, but they're also getting higher. So a buy trend is higher highs and higher lows, right? If that makes sense, guys, so far, drop some sevens in the chat, right? If you can understand the concept of higher highs and lower lows, higher lows, right? Because this is going to tell you about a buying trend. Now, when we get into a selling trend, and let me just change the color of my marker, right? Now, when we get into a selling trend, the opposite is happening. We have our high, right? This is now going to turn into a selling trend. This is no longer a trend. This is now a reversal. And we know this because now we have a high. This is a higher high, right? And then the market's dropping, right? So we have a lower low, right? This was a low, but this is a lower low because the market is going in that direction. So this was a high, and this was a lower high, right? This was an even lower high. So we can assume that the market is going to create a lower low, right? If that makes sense, guys, drop some sevens in the chat. If it doesn't make sense, drop a question mark, right? So when you are a reversal trader, what you are looking for is that if it was previously, and you'll see this, whether it's you're using the color of the candles because you're a visual trader, or whether you're using the numbers because you're a technical trader, if you see that the market, sorry, y'all, 1 second, where's mine? If you see that the market goes from creating higher lows, right, and higher highs, if you see that it switches from that, right, and it starts, the first thing you're going to want to ask yourself as a reversal trader every time, whether it's for buys or sells, is, do I see any liquidity, right? The liquidity is going to be sort of like a dead giveaway as to if this market is reversing or not. So I do see some liquidity. I see a few rejections. I see 1, 2, 3, 4, 5. I see 5 rejections, right? That's the first thing. Now, the second thing is you're going to move down to your lower charts down here. And for a reversal, if you're looking for a reversal and is going from a buying market to a selling market, you're going to want to see that your MOM is above 0, but it's facing down, right? So that's the exception. If this was for a buy, you would want the MOM to just simply be above the dotted line, and you would just know, okay, cool, it's still in buying momentum. But the exception, if it is above the dotted line, but it's facing down, right? That's the second condition that must be met for a reversal for a sell. First one, liquidity. Boom, got that. Second one, you got a red candle, right? That could be my second one, red candle. Third one, I see my MOM is above 0. I mean, above the dotted line, but it's facing down. And the fourth one, of course, we have our crossover, right? Remember, for a buy, it's supposed to cross up above any of the dotted lines, right? But for a sell, it's going to be crossing below any of the dotted lines. Anytime it crosses down, that is not only a confirmation, but it is a signal that you can actually take that trade in that direction, right? So this was a, sorry, y'all. So this was a great reversal trade because I had all of my conditions met. I had that liquidity there, perfect red candle. In this case, I'm not using the EMAs the same way, because if I'm looking for the market to reverse for a sell, I need it to be way above price. I need to be so above average that they're just like, this is getting ridiculous. I'm tired of paying. I'm ready to sell. And that's exactly what happened in that reversal. I'll give you another sell reversal example, and then I will give you guys the buy example. I'll take questions and we'll wrap it up. Right. All right. So here is a beautiful, beautiful sell example. You guys can probably already see it. I will use, they're all kind of nice actually, but I'll use this one. And then I'll also give you guys a re-entry option, which will be here. So again, if we were looking for a sell or a reversal in this market, we would actually notice first and foremost that we had the market was going up, right? We can clearly see that from is more green candles than red candles. That's a bit obvious right there. It was a simple little push up, and then we see this, right? This is the perfect thing you want to see when you're looking for a reversal. You want to see a halt. You want to see price coming off of a very strong trend and then just stopping. It's like, what's that about? That's super suspicious. Then we have this consolidation. We have one reversal, right? We have two reversals, right? We have three reversals. So technically, you could have gotten on this third candle, this fourth candle, this fifth candle, any of these candles after that second or third rejection. Why? The market did sell, as we can see. So the first thing we see is that strong trend was happening. Then we see that stop. Beautiful. We see liquidity there. That's letting us know a reversal is coming. What else do we see? We see our MOM, right, is above our dotted line, but it's facing down, right? Look right there. It's facing down. And then what else do we have? We have the cross down. Not only do we have the cross down, we have the orange line above the blue line, right? And even if you feel like, oh, I missed the trade, because a lot of people feel like they missed the trade, of course you wouldn't have gotten these pips, but we have the same thing happening over here. We have a rejection. We have a rejection, right? We have that stop right there. We have this line, right? It's slightly facing down, but that matters. And then we also have our orange line still above our blue line and it crossing below the line. So like looking for reversals, like once you know what you're looking for and what the indicators are, it just becomes like so much easier to even see. Like I'm pretty sure I can just scroll on this chart and you guys can see so many opportunities that happen. But just for the buy example reversal, literally y'all, same thing. You're going to want to notice coming off of a strong trend, right? If you're looking for a reversal for a buy, you see the market is coming off of a strong sell trend, right? Now, this should be easy to spot because it's already happened. It's coming off of a strong trend. The second thing you're going to notice is there's liquidity, right? You're going to see 1, 2, 3 rejections, right? 2 to 3 minimum. That fourth trade, you could have gotten on this candle or this candle. So we have strong trend, we have liquidity, and then I don't even have to say it. You guys should see it. We have the cross up, right? This cross up is, again, not just a confirmation, it's a signal. Your confirmations tell you the analysis of the trade, but the signal is your go ahead to get in. The cross up is your signal. Not only do we have it on the MOM indicator, we have it on the stochastic. Not only do we have the cross up, we have the blue over the orange, letting us know that buyers are in control. And then this trade actually really took off. So for my intraday traders and my swing traders, if you would have spotted this trade for your little reversal signal, in about 2 days, you could have got 185 pips just by looking at these lines and colors, right? Now, if you're using a 10-cent lot size, that's $18.50. That's not bad. 10 cents to $18 is amazing. If you're using a dollar lot size, that would have been $185, right? If you were using a standard, you would have made $1,800 just by being able to look at some dips and dots and lines and colors. Like, so yeah, y'all, that's really what I wanted to show y'all today. I'll show y'all one more buy reversal just so you can see that I'm not really making stuff up. It's just what be happening. Like, it really just be happening. So here's another great reversal for a buy. We have a strong selling trend, right? Market comes off of a strong selling trend. It's not going to sell forever. Second thing we have is there's liquidity, right? Now you can be super diligent and be like, I'm going to count these wicks, 1, 2, 3 wicks, get in. Or you can just simply notice and be like, all right, this thing was a little wicky. It's got to buy. Cool. What else do we have? We have our MOM below the dotted line, but facing up, right? Facing up is good. That means that year price is low, which we can see demonstrated here. Year price has dipped, but once you see that little curve, that little bend, that's letting you know the market is about to turn around. Not only that, we have our blue line on top of our orange line on the stochastic, and it's also facing up. And then what do we have? Boom. A really, really, really great reversal trade. And just to give you guys one last thing, again, with TPs and stop losses, again, let's look at this trade right here. This is where we are. This little area right there. Now, if you're going for a buy, no matter whether you are a trend trader or you are a reversal trader, your stop loss should be a previous low. So let me just zoom out and find the previous low. Well, this is the previous low. If we get in on, sorry, y'all, 1 second. So if we were to get in on this green candle right here, this red candle would be our previous low. So that's valid. And then you would set your TP, right? You can just be safe and do a conservative 20 to 25 pip TP. That's what I like to do because it's safe. However, when you're smart and you're confident and you're comfortable with your trading, you're going to set your TP for a buy at a previous high. So we can see that a previous high was there. And let me just turn it blue so we know that it's a profit line. We can see that a previous from here all the way down here to our previous high, which is our TP, the market still hit TP, right? It still hit TP because now that it's on the uptrend, remember, the whole purpose of the uptrend is to create higher highs, right? So in this particular trade, we could have made, oh, that's good. In 5 days, which is about 5 or 6 days. So that's about from, let's just say, Sunday to Friday. That could have been 242 pips. You could have risked $1 today and by Friday have $242. And God willing, you use a higher lot size, you could have made $2,400 on this one trade, and that could have paid your rent or your, I don't know, random vacation to Cabo, whatever you guys are into. But yeah, that's all I got for today. I really just wanted to highlight that for y'all because I noticed that when we're getting so much information and we are overloaded, we don't really know what we're looking for. But once you can establish, okay, I want to make my profit today, I got to pay a bill tomorrow, right? Because I've been there. You're a scalper. But if you like, oh, I just want to make this amount of money a week, I want to be able to just pay this bill at the end of the month, consider intraday and swing trading. Like it will not stress you out. Like this market is abundant. It is so many opportunities to trade. It's ridiculous. You're not missing anything. So like usual, before we go, we are just going to just look at a trade together. And I will drop this trade in the chat as well, just to see how it goes. But yeah, of course, I'm going to establish my support and resistance, basically everything we just talked about, and find a live trade idea, because this is what I do when I am dropping trades in the chat for y'all. I didn't really talk a lot about this today, but also break of structure is a really important concept to understand when you're trading. I have a video on that. All right, so before I say what my thoughts are for this trade, based on what we learned today, do you guys think that this market, let me just go a little bigger. Do you guys think that this market is going to buy or this market is going to sell? Wrong answers, welcome. I just want to see what you guys are gathering from. Yeah, made somebody card though. Oh, stochastic. Dang, Kayla, I'm seeing your message so late. Hey, y'all said y'all think this market is going to buy. Yeah. Let me put on my little session breaks real quick just to see. I ain't go over this today either, y'all. It's just so much stuff you can do. All right, so it has to break this low and then go up. Let's look at it for the week, y'all. Let's see what's happening. Okay, Joe said definitely want to sell. Might have to wait for it. Kayla and Kayla said buy. Okay, so far in a week, we have a potential sell that's building up really strong. This is the weekly. And we can see there's a rejection happening right there. We can see it starting to form under the second EMA. It's gonna be a cross up and a cross down. So that's a little confusing. This market actually been going crazy with the buys, so it is a little bit murky, but I'm gonna keep going. So I'm inclined to a sell right now. Yeah, I'm inclined to sell right now, but we're gonna see. And y'all know I love my sell limits. So a sell limit is about 100 points up. Sell. Yeah, I think this market is actually going to sell before it's going to buy. And for my people who have been here since the first day of class, yes, this market is going to turn around and buy because it has to break 111. That's the next thing that it's on to. But I think it's going to sell first simply because look at the session break. It's too far to break the previous high right now, but the previous low from the previous session hasn't been broken, nor has this low been broken, or this low been broken, or this low been broken. And also, if y'all look, we're coming off of a strong buying trend, which means that sell is probably very likely to happen. No, it's okay. That's why we're here. We're here to learn. I encourage everybody to always use your demo accounts. I'm probably going to mark this up a little bit more if I don't drop the trade right now. But I do see potential sell only because we have a resistance here, right? We have a higher low, right? So the market seems to be coming off of this strong buying trend, right, y'all? And it seems like it's going to come down. So because we already put these support and resistance lines here, it looked like the market is going to break this resistance, take out this low, and come back down to this low right here. So that could be a potential sell. I'm not going to drop it in the chat right now. The market just opened. I like to at least wait. Personally, for me, I like to wait until like 8 o'clock just to see what direction is really going to go. Because like you said, Kayla, it is a lot of consolidation. Y'all gotta let me know if y'all want me to call you Kayla and Kayla, Lotus and Miss Catching. I don't know. Like, I don't want y'all to get confused. But yeah, any questions from the rich friends that you guys want me to review again? I am getting heavy sell vibes from this trade, though. I can see a good 20 to 30 pip sell before this market turns around because it really is having strong buy vibes. But y'all know everybody trying to cancel United States, so that's a reason to sell enough. But all right, I don't have any anything else. If you guys have any questions, I'm going to wrap this up here. Again, I will post this video in the chats. Let me stop recording really quickly.